Hello and welcome. Let's discuss how to report solo 401k contributions on your tax return, your 1040. So this is for those solopreneurs whose business is taxed as a sole proprietor, a 1099 NEC independent contractor, freelancer, etc. Thank you so much for joining. We're excited to get started and go over this content. If you have questions that you'd like to discuss, please don't hesitate to bring those questions up in the chat. If you are on YouTube, please subscribe, please like if you find this helpful. Helps us to get the word out. All right, so as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice. We would never discourage you from also discussing with your tax, legal, or investment advisors. All right, before we jump into the content and the details, we also want to just quickly highlight our resources. We have a vibrant community with over 30,000 members. You can go there 24/7 and post questions. You can see what other people are posting. It's a great venue to learn, to share the knowledge. We also host these webinars twice per day. So we were here earlier at 10 a.m. Pacific, 1 p.m. Eastern. This is our afternoon session. So we do appreciate the chance to discuss these topics. So here's our community, mysolo401k.net/my-community. As I mentioned, you can see we have forums. So it's a great place, it's a great venue. We also, of course, are on YouTube. So if you can check out YouTube, you can also see we have a library of videos there as well. So we like to come every day with some educational content, but we also appreciate the chance to discuss any topics that you might have. So if you do have some questions or topics, don't hesitate to chat those over. So as mentioned, we want to discuss how to report solo 401k contributions on your tax return. And this is geared specifically towards those solopreneurs whose business is taxed as a sole proprietorship. That means that you're reporting income on Schedule C of your 1040. Now, with our solo 401k plan, our plan allows for all types of contributions. So not only pre-tax contributions, which has the benefit of reducing your taxable income now for the year for which you make the contribution, but also allows for Roth and even mega backdoor Roth contributions. So how one reports those contributions will depend on the type of contribution that you're making, as well as how your business is taxed. So for somebody whose business is taxed as a sole proprietorship, who's making pre-tax employee contributions, that means that your income is going to be reduced, right? So you're trying to make 401k contributions and reduce your taxable income. So mechanically, the way that it works is that pre-tax employee contribution that you make will flow to line 16 of Schedule 1 of your 1040. That's how it'll reduce your taxable income. Now, if somebody's making Roth employee contributions, that means that those contributions are being made on an after-tax basis. So it's not going to reduce the income for the year for which the contribution is being made. However, you have that potential for tax-free growth. So when you make that contribution, you make it on an after-tax basis. So for somebody whose business is taxed as a sole proprietor, if they're making Roth employee contributions, there's no place to report those contributions on the 1040. So it's not applicable. Likewise, if you're making voluntary after-tax contributions, which is also another type of employee contribution, but the contribution limit is much higher. And that's how one makes mega backdoor Roth contributions. So when you make a mega backdoor Roth contribution, the individual first makes a voluntary after-tax contribution. Of course, they have to have a plan like ours that allows for voluntary after-tax contributions, and then transfers the money either to a Roth solo 401k or a Roth IRA. So it's a two-step process. You first contribute, then you transfer, step 2. So that first step, the contribution, that's not reportable for a business that's taxed as a sole proprietorship. Like the Roth employee contribution, there's no place to report it. So an answer to the question of how do I report contributions on my tax return, if we're talking about voluntary after-tax contributions, the answer is there's no place to report it. So it's not applicable. Now, the other type of contribution that we haven't talked about is employer contributions. So at a high level, you have employee and then you have employer, right? In the words of the IRS, a self-employed individual is both the employee and the employer. So they can make both types of contributions. That's why a solo 401k has the highest contribution limits for any defined contribution plan. So our plan, of course, allows for employer contributions. Now, since Secure Act 2.0, if you have a plan like ours that allows it, the individual can even make those employer contributions as Roth contributions. Now, historically, employer contributions were always made as tax-deductible contributions, as pre-tax contributions. So when Secure Act 2.0 came out, this created an open question of, okay, well, how does one report employer contributions made as Roth contributions? And the answer to that question wasn't provided by the IRS until almost a year after Secure Act 2.0 was enacted. It was provided via IRS Notice 2024-2, which provides that employer contributions made as Roth contributions are still reported as tax deductible on the employer's return for the year for which the contribution is being made. Now, we have to make that point that for the year for which the contribution is being made, because one can make contributions for a prior year. So that's one of the unique things about a solo 401k is that the deadline is the business tax return deadline, including any timely filed extension. So one could be making employer contributions for 2024, but depositing those contributions in 2025. So per IRS Notice 2024-2, employer contributions made for 2024 are going to be tax deductible on the employer's return for 2024, but taxable to the employee for the year of the deposit. So if they're deposited in 2025, but made for 2024, it'll reduce the taxable income on the 2024 return, but raise it on the 2025 return. It needs to ultimately be taxable now because it's being made on a Roth basis. So when those funds are deposited to that Roth account, it needs to be made on an after-tax basis. And then like any Roth contribution, you got that potential for tax-free growth. So the answer to the question of how do I report contributions on my tax return, if my business is taxed as a sole proprietorship and I'm making employer contributions, well, it's going to be reported on that same line. It's going to be reported on line 16 of Schedule 1 of the 1040, regardless of whether those employer contributions are made as pre-tax or Roth, because per IRS Notice 2024-2, it's going to be tax deductible on the employer's return for the year for which the contribution is made. And so for a business taxed as a sole proprietorship, the employer's return is really the 1040. So it goes in that same line. Now, if it is an employer contribution made as a pre-tax contribution, then it'll be pre-tax and it won't be taxed. The contribution will reduce the taxable income for the year for which the contribution is being made. So that'll be it. Like once it's reported on line 16 of Schedule 1 of the 1040, there's no more reporting. But if it's made as a Roth contribution, if it's an employer contribution made as a Roth contribution, the second step would be to make it taxable to the employee. Now, it'll be taxable for the year of the deposit. So if it's a 2024 contribution made in 2025, it'll be taxable in 2025 to the employee. Now, the way that it becomes taxable is via 1099-R. So a 1099-R will have to be issued to report that employer contribution made as a Roth contribution. And we do handle that as an optional free service for our customers, for those that request it in a timely fashion. In other words, for no additional charge. Okay, great. Well, that gets us through all the contributions and how one reports those contributions on your tax return for those solopreneurs, those freelancers, those self-employed individuals whose business is taxed as a sole proprietorship. In other words, the income's reported on Schedule C of the 1040. Thank you so much for bringing the good question, a question about the tax credit. We appreciate you bringing the questions. Yes, it's an open forum, so we just like to start it out with some prepared content that folks are asking about just to make it helpful. But we always appreciate the chance to discuss questions, so don't hesitate to chat over questions. So the S Corp files 8881, and then a proportionate share of the $500 credit is reported on Schedule K1 for each S Corp owner, who then each file their own Form 8881 and 3800 with their respective Form 1040, and report their proportionate share of the $500 credit on their respective 1040. Exactly. So there's one credit at the business level. So if it's a sole proprietor, it's just a one-person business, then that person gets the entire $500 credit. But if it's a two-person business, they could decide that one person gets all the credit or the other person gets all the credit, or they share it. But it cannot be more than $500 between the two of them. So let's see here. Let me pull up. Let me see if I can get your email and your account real quickly, because we did host an IRS enrolled. We hosted a webinar with an IRS enrolled agent where we go through step by step how to complete these forms for all the different scenarios, whether someone's business is taxed as a S Corp or a sole prop, etc. Okay, wonderful. So I'll send you over I'll send you over an email now with a link to the webinar. I can see that we sent it to you when you signed up, but we're happy to send it over now as well. So let's see here. Thanks so much for your business, and thank you so much for the good question. So we'll let that fly as soon as we're done here with the webinar. So thank you so much. So as far as other questions that one might ask, some common questions this time of year is that we'll chat it over just to get it visible for everybody. Is there still time to open a solo 401k for 2024? So the answer is yes. So even though a lot of individuals want to sign up by the end of the year to be able to give them the most options, to make the most types of contributions with the most amount of time, which is true. If someone signs up by December 31st, they'll be able to make all types of contributions, whether employee, employer, or voluntary after tax, by their business tax return deadline, including any timely filed extension, regardless of how their business is taxed. So that gives that person the most optionality. So if someone had a plan somewhere else that they had set up before the end of last year, and then they want to upgrade to our plan now, or if they signed up with us by the end of last year, then they would have preserved the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by their business tax return deadline here in 2025. But for those that didn't do that, right, they didn't sign up with a basic plan, maybe somewhere else, or didn't sign up with our plan before the end of last year, December 31st, 2024, and now they want to set up a plan, and now they want to still make contributions for 2024, there still are some options available. Not as many, but still are some. So we can talk about that for a moment, because that's a common question. So now it depends on how their business is taxed. So if their business is taxed as a sole proprietorship, then they could still set up a plan here in 2025 and make all types of contributions, but they'd have to set up the plan in time to make those contributions by April 15th. Employee, employer, and voluntary after tax. Now, if they don't set up the plan in time to make the contributions by April 15th, they could still make employer or voluntary after tax by October 15th, as long as they file a timely extension for their 1040. Now, for other business types, let's say it's an S Corp or a partnership or even a C Corp, if they didn't have a basic plan somewhere else, that they, like, let's say they didn't set up a solo 401k at Fidelity or Schwab before the end of last year, and they didn't sign up with us before the end of last year, if their business is not taxed as a sole proprietorship, then it's too late to set up a plan and make employee contributions, but there's still time to set up a plan and make employer contributions or voluntary after-tax contributions for 2024, as long as they sign up in time to make those contributions for 2024, whether employer and or voluntary after-tax, by their business tax return deadline, including any timely filed extension. So if their business is taxed as a C Corp, it's April 15th or October 15th if they file a timely extension for that C Corp return, that 1120. If their business is taxed as a partnership or an S Corp, then that deadline is March 17th or September 15th if they file a timely extension for their business tax return. Great question. If we make a contribution in 2025 for 2024, how do we reach out to you regarding the 1099-R for 2024? Well, the 1099-R is really issued for that second step, right? When you're making a mega backdoor Roth contribution, remember, it's a two-step process. The individual first deposit the funds into the voluntary after-tax account, which, as we saw, is not reportable. Doesn't need to be reported. And then the second step is the move from the after-tax account to the Roth account. So if the contribution is being made in 2025, obviously the move's not going to happen until 2025. So the move from the after-tax to the Roth, either the Roth Solo 401k or Roth IRA, that's what's reportable on a 1099-R. And that's reported for the year of the move, for the year of the conversion, for the year of the transfer. So even if the money was really a contribution made for 2024, if it's not deposited and then moved until 2025, it's not going to be reported until a 2025 1099-R. So customers use a form on our website. You can find it at mysolo401k.net/forms to give us the information we need to prepare the 1099-R. And then if that's a 2025 transfer, it'll be issued on a 2025 1099-R, which will be provided by February 2026. Great question. All right, well, that looks like it takes us to the end for today. If you found this helpful, please like on YouTube. Please subscribe so you get the notifications, hit that notifications bell. We go live twice a day. So we come every day with content, and then also it's an open session, Q&A. So if you have questions, feel free to bring them. We can go over them. If you have a question, it's very likely that others have a question. So it's always super helpful. We always appreciate the chance to discuss the topics. So until next time, thank you so much.